down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. We will make our decisions meeting by meeting and will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Market's moving.
Questions.
Thank you very much, Mr. Chairman. Let me, on behalf of Chairman Brown, recognize Senator Warren.
Thank you, Acting Chairman. I appreciate the help of the Chairman this morning, and thank you for being with us, Chair Powell. So Americans are struggling with rising costs, and all eyes turn to the Fed. Last week, you announced that the Fed would raise rates by 0.75 percentage point, the biggest increase in nearly 30 years. So let's talk about what the Fed is and isn't doing when it raises interest rates to try to bring down inflation. Let's start with gas prices. The price of gas is up 40% since Russia invaded Ukraine in February. Chair Powell, will gas prices go down as a result of your interest rate increase?
I would not think so.
Tesla's about to break yesterday's highs.
That matters because gas prices are one of the single biggest drivers of inflation. Energy prices overall drove a third of the inflation last month, but the Fed's tools, as you say, have no impact here. So let's look at another necessity, food. Price of groceries is up nearly 12% this year. Americans feel the pinch. No matter how much groceries cost, people still got to eat. Chair Powell, will the Fed's interest rate increases bring food prices down for families?
Dude, we're about to go on a fat rally if all these break yesterday's high
So
today.
a Fed increase won't bring down these prices. And why? Because rate hikes won't make Vladimir Putin turn his tanks around and leave Ukraine. Rate hikes won't break up monopolies. Rate hikes won't straighten out the supply chain or speed up ships or stop a virus that is still causing lockdowns in some parts of the world. Let's talk about what interest rate increases can do. Chair Powell, you said last week that interest rate increases, quote, moderate demand. Can you just explain a little more about what that means?
Sure. So we think about interest rate increases as affecting financial conditions and then the economy through three broad channels, the first of which is interest-sensitive spending. So that's durable goods and automobiles and things like that. So
was this gap down a fucking bear
people's
trap?
demand for, as a result of higher interest rates, will moderate or decline so that supply and demand can get into better balance. The second channel is just asset prices generally. Interest rates, as they go up, will cause asset prices to moderate across the economy, and people spend a little bit less out of their lower level of wealth. The third channel is the exchange rate, which is really just another asset price, and that just basically as the dollar strengthens, as rates go up, the dollar would strengthen, which would tend to drive.
So I appreciate this, and I do. I appreciate the explanation, but let me just see if I can just put a little more plain vanilla explanation of what's going on here. If I understand what you've said and what economists are saying across the board is that when you raise interest rate, there's going to be less money to invest. And that is, it's going to dampen business investment. Is that a fair statement?
I think the idea is to
moderate
demand
to invest
so that it can be in better balance with supply. And
so
the current situation, demand is well in excess of supply in some areas of our economy.
More expensive to invest, which in turn is going to throw workers out of work. And when they're out of work, they have less money to spend. So I get that rate increases stop companies from spending money to build new plants or to buy new trucks or to hire new people. Right, Chair Powell? When money's more expensive, they're less inclined to do that. I think that's what you just said on asset pricing, right?
Well, in the labor market, you have, as you know, you have a situation where there's a shortage of workers, and there are two job vacancies for every person who's actively looking for work. So part of this is to get the labor market back into balance.
Well, I appreciate you call it back into balance. What I'm trying to get at, though, is what does the tool of raising rates do? And part of what you just said is that it increases, in effect, the cost to invest, to buy those trucks or new plants or to hire new people. The reason I raise this and the reason I'm so concerned about this is rate increases make it more likely that companies will fire people and slash hours to shrink wage costs. Rate increases also make it more expensive for families to do things like borrow money for a house. And so far, the cost this year of a mortgage has already doubled.
Here we go, Tesla.
Inflation is like an illness, and the medicine needs to be tailored to the specific problem. Otherwise, you could make things a lot worse. And right now, the Fed has no control over the main drivers of rising prices. But the Fed can slow demand by getting a lot of people fired and making
I'm live on YouTube.
Poor. And while President
Sorry,
Biden
we got pauses for one moment. Talk again.
Hello?
Okay. Yeah, it's picking you up.
Increase energy supplies and straighten out supply chain kinks and break
I'm
up.
going to switch to the streaming screen. I'll be right back.
You could actually tip this economy into recession. So I just want to say, you know what's worse than high inflation and low unemployment? It's high inflation and a recession with millions of people out of work. And I hope you'll reconsider that as you drive this, before you drive this economy off a cliff.
And we're
Thank
back.
you, Mr. Chairman.
Thank you, Senator Warren.
There we go.
Chairman Brown. Senator Tillis, please.
Senator Reid, I'm going to
just
defer
need to
and
move
allow
this
Senator
over
Shelby
here.
for me, and then I'll follow in turn.
Quite all right, sir.
The other monitor.
Thank you.
There
Mr.
we
Chairman.
go.
Chairman Powell, earlier this month, Secretary Yellen acknowledged she was worried about the risk of inflation.
Excuse me.
Previously, you also acknowledged that the Fed got it wrong in thinking that inflation would be transitory.
Is VIX still an
Yet
off for you?
myself and other members of this banking
VIX
committee
what?
here have been
Is
warning
VIX still
about
an off for you?
inflation
I still got
for over
30,
a year.
34.
Last July, nearly 1 year ago, when you came before
VIX
this committee,
is at
I
30.12.
raised my concerns
Kinda
about the
bouncing
risk
a little
of
bit.
rising inflation, particularly
What?
following the enactment of a $2 trillion spending bill.
Let me take
At that
this.
time, there was
What's this look
already
like on stream? I
evidence
think it's too much
that
for the
inflation
stream.
was affecting numerous areas of our economy. I discussed the
We'll
year-to-year
switch to
price
this.
increases on agricultural goods such
We
as
don't
corn,
need
wheat,
DXY
and
up at the
soybeans at
moment.
that time. I
Let's
pointed
switch
out the
this.
rising cost of metals,
Why?
including copper and aluminum.
Close
I
that.
mentioned the increase in energy prices, used cars, and airline tickets. As someone who remembers, and I do from this committee, encountering high inflation during the 70s, I warned that many of the same conditions present then, such as loose monetary policy and significant government spending, were occurring again, among other things. My main concern last year was that the Federal Reserve would fail to address rising inflation before it was too late. 11 months later, this concern has come to fruition. And as we sit here today, inflation, as you've already pointed out, is at a 40-year high. The average gas price is over $5 a gallon. And we're currently in the midst of 12 consecutive months of inflation above 5%, including spiking to 8.6 last month. Ultimately,
All right, let's be clear.
as inflation continues to
The Federal Reserve does not set up energy policies which cause a squeeze in energy prices, which cause the huge hike in gas prices. So, them even mentioning that to Jerome Powell is just stupid, because they should get a mirror.
wrong on inflation are now being felt, has been pointed out here today, by American families and workers across the country. And despite the recent decision to raise interest rates, the Federal Reserve still has a long way to go to get inflation under control. What can we expect in the future from the Federal Reserve? And I know you don't have total control over inflation, but you have a lot of sticks there. And what will you use to bring this under control?
One stick. They have one stick.
So,
raising interest rates.
Of course, have tightened and
That's it.
placed in
I gotta use the bathroom. Hold
a
up.
string of additional rate increases, and that's appropriate. Well, as you pointed out, and as Senator Tillis pointed out as well, our policy rate is only at 1.6%, but all out the curve, the market is pricing in increases. So financial conditions already have already priced in additional rate increases. But we need to go ahead and have them, and I think that the most recent inflation indicators of various kinds suggest to us that we needed to accelerate the pace at which we get up to a level that is neutral, that is close to the longer run neutral level, and then we can make an assessment of how much further and faster to go. And so that's what we're doing. I think you can see from the moves we're making now that we do understand the full scope of the problem, and we're using our tools to address it pretty vigorously now.
Mr. Chairman, explain to us again how important one of your mandates is price stability. How important price stability is to all Americans.
So price stability is really the bedrock of the economy in the sense that you really cannot have a sustained period of maximum employment, our other co-equal goal. You can't have that without price stability. And so we must restore price stability, and we will. We have the tools and the resolve and hopefully the judgment to accomplish that task. It's essential that we do.
What's your next step?
Well, if you look at the market has been I think reading our reaction function reasonably well, and I think what you will see is continued progress toward expeditious progress toward higher rates.
Expeditious.
I'll say this: the center of the committee wrote down that rates would be between 3 and 3.5% by the end of this year, as of a few weeks ago, as of 1 week ago.
Is this Federal Reserve Board of Governors, under your leadership, committed, as Dr. Volcker was some 40 years ago, to bringing inflation under control no matter what?
I would never want to try to compare myself to Paul Volcker in any way, but I will say that we are strongly committed to restoring price stability. We do understand that it is the thing that we need so that we can get back to the kind of labor market that we all want.
But reaching the standard that Volcker left in the Fed would be a high reach, but one that anybody there should try to get there, wouldn't it?
Yes.
Thank you, Mr. Chairman.
Thank you, Senator Shelby. I'll exercise my time now. Mr. Chairman, you point out in your testimony that the core personal consumption expenditures, minus gas, food, and rent, 4.9%, and even slightly declined from the previous report. So that leaves the real culprits.
He doesn't want to be compared to Volcker because he doesn't want the markets to go into shock.
Gas prices.
That's what's going on there.
Is that correct?
But price stability means literally bringing down the market. That's what it equates to.
And then, the refining spread as well.
Right. And that has been exacerbated by the Ukraine invasion. We've deliberately, and the Europeans have deliberately cut off accessing Russian supplies, and that's added to inflation. And the other problem also with hydrocarbons, it's a cartel that sets the price. Is that accurate?
Sorry, what's a cartel?
It's a cartel that sets the price
Yes.
of oil worldwide.
Yes, globally, that cartel has a very major impact on the price of oil.
And they have decided that further production is not as lucrative to them as just sitting back and making money. That's what it appears like. With respect to food, there are multiple factors there also. One is climate.
So they still want to ignore all the issues that are actually causing the inflating energy prices.
All this is outside the purview of the Federal Reserve, but I think it's helpful to
Which is
understand
why I love the XLE trade that we set up today.
Transportation issues.
Made a few attempts there. Energy's been hard to trade right now, but the money will come in. Just gotta have patience with it. Might take a few attempts. Right now, melting up nicely.
Exported from Ukraine or
on the
Russia,
4 hour,
as
looks
well
like a
as
triple
fertilizer.
bottom.
That's
The
right.
4-hour chart,
And
that
then
is.
The rental
And I like it.
issue, that has been a crisis since
That's
I
when
became a
XLE
congressman in
also been
1990.
buying
I
up some
recall
CCJ.
marching and
Let me
working
actually
for
take him
affordable
up
housing
there.
in 1990. We just don't have enough.
Look here.
And that, I think, is a factor too. Are those the major causes for these increases in prices?
Uranium positions.
Those are some of the major ones. You could also point to some parts of the goods economy, which have been restrained capacity, and you're actually seeing significant price increases in some of the service economy as it really reopens fully now, and that would be the travel and leisure sector.
There's another issue too. We talked about the cartels that
Looks
dominate
like this market wants to
hydrocarbons,
melt
but
up right now.
we found, for example, during the pandemic, that there are really just 4 major meat processors in the United States. And with 4, rather than a multiple of that, there is the ability to indirectly restrain supply and increase prices. In fact, some of my colleagues, particularly in the House, have been talking about the antitrust aspects of some of these price increases. Is that a plausible ingredient to the problem, too?
So I think that's really a matter for the competition authorities, not for us. But sure, I think broadly speaking, our economy is very competitive. There will be some industries where that's less so the case.
So these
that's the best non-answer you could have given.
You're basically tool.
As he should. This is a stupid question.
Going in and out of buying public securities. But
basic economics. The top 20% is going to get 80% of the business for any sector. That's why for most sectors you just want to play to the winners, because winners just tend to win more. All right, the big tech companies buy out the competition. The best food brands get people buy it the most because it tastes the best. Top 20% gets 80% of the business. All right, top 20% of workers do 80% of the work within each company. This is the same physics equations that you can use for the formation of planets. All right, or for the distribution of energy within the body and metabolism. It's just a natural law of the universe. So to sit here and whine about a natural law of the universe, how useful is that? These people are so stupid, it's profound.
One other fact, too, with respect to hydrocarbons is perhaps the companies are either unconsciously or consciously limiting investment because they're anticipating an electrified power supply, electric cars, electric everything. Is that something that the Fed is looking at?
I think that is certainly, if you pick up the annual report of any of the big oil companies, you'll see that is something that is happening, and it's a rational economic response to expectations about where future policy is headed.
No, I think there are so many factors here, but I think it's good to get some of them on the table. And thank you very much, Mr. Chairman. With that, let me recognize Senator Tillis.
Thank you, Senator Reid. Again, Chair Powell, thank you for being here. By the Fed's own analysis of various policy rules, including the Taylor Rule, the revised Taylor Rule, the Balanced Approach Rule, and the Balanced Approach Shortfall Rule, rates should have begun to rise long before they did. According to the Fed's own analysis of these rules, the Fed's fund rate should currently be above 6%. This is in a report to Congress. Yet the rate currently stands at 1.6%. Likewise, these same rules should have prompted the Fed to begin raising rates Q4 last year, Q1 this year. I'm concerned that the Fed has opted out of rules-based to discretionary monetary policy. As the Fed reviews monetary policy strategy, Chair Powell, will you commit to considering an increased weight for a rules-based strategy in Fed decision-making, and if not, why?
I didn't even notice that biotech took a big hit today.
We do use policy rules like the various...
Which is good, because yesterday I actually sold a lot of the position.
We do.
So really dodged that.
Monetary policy will affect the economy. You have to have some sort of a rule like that. Fed's never really used them in a prominent way
Yeah,
to
CRISPR was
actually
down
set
at 8%
policy
at
in
one
real
point.
time.
Actually, it might be tempted to
But
buy
that's not to
some
say they
here.
don't shed light, and we do consult them.
I don't want to overtrade here, though. I might wait. I think it's going to come down more in July.
The rules called for deeply
Give it a
negative
month.
rates during the pandemic, and we didn't do that. They did call, of course, for rates to move up, and rates now really are moving up much closer to where the Taylor rule, various forms of the Taylor rule are, and I think by the end of the year we'll be pretty close to where some of the Taylor rule.
Dipping my hands in UNG as well.
Something that we consider. I think in a couple of years when we look at our framework again, that's something we could look at.
And Chair Powell, could you just briefly explain the variance between rules-based decision-making being at 6 and where we are today? What other factors came into play?
So what Taylor rules don't take into consideration changes in financial conditions. They just look at the overnight policy rate. As I mentioned earlier, we began signaling, and the way we're set up now to signal policy changes going forward with the summary of economic projections that we do 4 times.
3,800
so markets price
decliners and 2,900 advancers right now.
Well in advance of actually.
This market is still favored to the downside, even though SPY and TQQQ are melting up.
But look out.
Tesla's in an interesting position right here.
Very substantial additional rate hikes are already priced.
And I am listening to this stream.
And they have been for several months. So that's one way of thinking about it. It's really only at the very short end of the curve where rates are still in negative territory from a real perspective. If you look farther out, real rates are positive right across the curve. And
this could gap fill to 650 or come up to a
situation like this where we have 40-year highs in inflation, and we know we need to have restrictive policy.
770, 775 range.
In 2012, the Fed adopted its current 2% inflation target, then amended this in
to go either way
to allow inflation to run over 2% target, so that inflation averages 2% over time. Many warned this approach would simply give inflation a foothold before the Fed could respond. Now inflation's at 6.5% per year, and many serious analysts are predicting a recession. According to the Fed's framework, will the Fed push inflation below 2% so that
they're predicting the recession that's already here, guys? Wow, they're so good at their job.
It averages 2% over time?
No, that wasn't the way the framework worked. And I should clarify, though, the framework was carefully focused on what we knew, which was the economy of the last 25 years. The pandemic hit a few months afterward, and I think we've been aware since.
I just totally spilled water on myself.
That the disinflationary forces of the last quarter century
have
been replaced, at least temporarily, by a whole different set of forces. And those are the forces that our policy has been reacting and dealing with, and we're well aware of that. I think that what we were looking at was a world in which you didn't see inflation move up even when unemployment was for an extended period well below 4%. This is a different economy, different forces. The real question is how long will this new set of forces be sustained, and we can't know that. But in the meantime, our job is to find price stability and maximum employment in this new economy.
And final question is, there is some renewed discussions about increased spending and increased taxes through reconciliation. Just hypothetically, if Congress were to pass a bill that increased spending by $500 billion or $1 trillion and raise taxes, would that make your job easier or more difficult?
I swore off getting involved in these fiscal debates a year or so ago, and I'm determined to see if I can't stick to that. But remember, we can always incorporate. And what we do is we take fiscal policy as given, and we react appropriately.
Well, then maybe instead of policy working through Congress, but policy that was passed by Congress, do you believe that the $1.9 trillion spending package last year had any effect on inflation?
It's really not our job to pass judgment. We didn't pass judgment on the Tax Cuts and Jobs Act or the CARES Act or that act as well, the ARP. So I really think that's a job for Congressional Budget Office.
Thank you, Chairman Powell.
Thank you, Senator.
Senator Cortez Masto of Nevada is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. Let me start with high prices. because not only in Nevada but across the country.
Hey, 1 second, folks. I'll be right back in a moment.
Prices, which really is creating a financial hardship for too many families. And I want to start with gas prices first. In Nevada, average price of gas is $5.60. In Las Vegas, about $5.60. In Reno, at $6 a gallon. And as gas prices rise across the country, oil and gas companies, we know, are making record profits, but are using that money to continue to consolidate their industry and pay for stock buybacks instead of investing in increased oil production. On one of them, one I've heard is over 9,000 permits that they have that are unused drilling permits, or they're not expanding their refining capacity. We also know that reduced refining capacity is a particular problem that has been caused in large part by decades of oil industry consolidation and is driving gas price hikes to be as much as 61 cents a gallon higher than expected. So when considering the drivers of inflation, how much do Federal Reserve economists consider consolidation in an industry? And what else can we do to hold these industries accountable for their contributions to rising prices?
You know, so those are really questions for the competition authorities, questions of industry structure and consolidation. They really aren't questions that we directly address. You know, we raise interest rates, and our job is maximum employment.
But I have to push back. You have to consider that. I mean, you're considering what's happening in Ukraine as a variable on inflation and high prices. So you have to consider the fact that we have these oil companies. They are exclusively control this commodity that is key for this country. We know that not only do they produce and decide how and when they're going to drill crude oil, we also know the refineries, and quite honestly, the refineries in this country are not prepared to refine the domestic oil that even comes from Texas and the Dakotas. The refineries are prepared to refine the oil that comes from out of this country. And we also know that many of the oil companies have their own traders that are trading on the price of crude oil in this country. I mean, listen, you just talked about an outside agency. This is why this is so important and why I am a co-sponsor of the Transportation Fuel Market Transparency Act. Glencore was just fined $1.1 billion because they were manipulating the oil prices to their benefit. So that is something you have to take into consideration when we have an industry like these gas and oil companies that are so consolidated. They are having an impact on the prices to the detriment of the people in my state. So that has to be something you consider and take into consideration when you're looking at the impact that people across the country are seeing from these high prices. I hope it is. Please tell me you are.
Well, I think we see that the global oil prices, which have very important effects on gas prices here at home, are set on the global market, and that, as we mentioned earlier, there's a large cartel that is responsible to a significant extent for setting those prices. We take that as given.
So do you pay attention to what Wall Street is saying and what these cartels are doing? When you say cartels, these are these big oil companies, and they're indicating that, well, I'm not going to drill because I'm making profits because the price of gas is so high. So you would assume, I would hope that you would take that into consideration, that it's going to continue these high prices because there is a challenge in holding these oil companies accountable.
So in principle, we pay attention to anything that could affect the use of our tools and the need to use our tools. And I think with the future price of oil, the best thing you can probably do is look at oil futures, because futures in theory should be taking into account all of these factors, and that's what we do. But ultimately, the question for us is, do we raise or lower interest rates? We don't have tools that would address these practices that you're discussing. They're not really, of course, we understand them.
Well, do you have concerns that these oil companies are manipulating or controlling the prices that we have right now? Do you take that into consideration with the tools that you need to reduce inflation and reduce these costs?
Honestly, those are not judgments for us to make. The questions about industry structure and competition are really not. It's not our assignment. Our assignment is maximum employment and price stability.
The outcome of that infrastructure is something you've got to take into consideration.
Yes.
Unless they change, the prices are not coming down. Unless they stop giving profits and sharing that with their shareholders and start addressing and looking at actually the consumer at the other end of this who is bearing the brunt of it, these prices are not going to come down. I would assume you take that into consideration. Maybe I'm wrong.
Well, when you say take it into consideration, we do have to have a forecast of oil prices, and we do. But ultimately, though, the question for us is price inflation, what's happening with price inflation. And it's a macroeconomic question. It's not a question about industry structure or corporate behavior. It's a question about what will be the behavior of inflation across the economy. And in particular, there's really not anything that we can do about oil prices. There's a little, food prices is a bit more mixed, but for oil prices, they're set at the global level. It has to do with global oil prices and also the refining spread. Neither of these are things that we have the tools to affect.
Does it concern you that these oil companies haven't come to the table to look for a solution to help us reduce fuel costs?
I don't think it's appropriate for the Fed or for me to be reaching out into areas of policy that are not assigned to us. It's not up to us to comment on that sort of thing. We have a very specific job and precious independence to carry that job out. And I think the other side of that is stick to that job.
Yeah.
Our job is maximum employment and price stability.
Advancers are catching up to decliners right now. You have 3,400, basically 3,500 decliners, and basically 3,300 advancers right now.
It seems as though
when it comes to stocks, that's what I mean, individual stocks, and decliners and advancers.
Has been a primary item of discussion. I want to follow up, just as my colleagues have, and I'd like to take it in a little bit different path, perhaps, because when it comes to breaking down the different causes of inflation, clearly there is the supply side and the demand side. The reality is that a large portion of the inflation
YouTube
stems
right
from
now, so I
the
can see
higher
comments.
energy prices, which is part of the supply side issue.
1 second.
When President Biden took office,
Got any questions? Hit me with them.
January of 2021 through January of 2022, the price of unleaded gas.
I'm sorry, folks.
50%
First time apparently. All right, there we go.
To about $3.30 per gallon. Now that was well before the Russian invasion of Ukraine. Higher prices are instead, I believe, a direct result of policy decisions made by the Biden administration, like prohibiting new oil and gas leases on public lands and waters and choking off future access through the Keystone XL pipeline and increasing U.S. dependence on
no questions yet. If you have questions, let me know.
OPEC to produce more oil. All of these
leave a like on the stream. I'll be keeping an eye out
to the market about the future of investing in oil and gas processes within the United States. At the same time, Mr. Chairman, your tools are designed, as we've discussed in the past, to impact not necessarily the supply side, but the demand side of inflation. So if you attempt to use your tools that are available at this time to address what I believe to be the policy-induced side of inflation, do you risk hurting the economy by using these interest rate increases when, in effect, as you've indicated earlier here in this meeting, that you really can't impact the price of gas or the price of food?
So I think that's right. We know that our tools can affect certain aspects of inflation, and that would include certainly energy inflation and food inflation. So nonetheless, our statutory goal is headline inflation. But
oh, geez, what did I just do?
And so we focus very much on that as a better representation of what underlying inflation of the economy is at any given time.
And I think
Tesla continues to melt up. I'm not playing much individual stock names to the upside.
I think earlier we thought
I do have some share positions. No options though.
They have proven not to be transitory. In fact, South Dakotans are now paying $682 more per month on goods and services than they were when President Biden took office due to inflation. The administration is claiming the Federal Reserve can fix our inflation problem. But as you've just indicated, you focus on core, and your tools might very well work on core, but not on those really heavy drivers to inflation that South Dakotans are seeing like the rest of the country. See, Mr. Chairman, what I believe is going to happen here, and I just share this, clearly you are aware that you're going to be the person that takes the fall if inflation is not brought under control. And this administration is going to point to you and to the Federal Reserve saying you have the tools to fix inflation and you're not doing your job. When in essence, the portion of inflation which Americans are feeling today may not just be the core inflation that some of your tools do, but the total cost of inflation that my citizens in South Dakota feel to the tune of, well, $682 more per month in living expenses than what they were when this administration took office.
So we're focused on the part of it that we can address, and that is there's a job to do on demand here. There are parts of the economy where demand exceeds supply, and that's where we think our tools can help, and that's what we're focused on.
Very good. Just very briefly, Mr. Chairman, another item. The Basel Committee on
SHOP is doing well.
Issued
I have a
press
SHOP
release
call
indicating
position,
that it made
actually.
Substantive technical
And I just remembered that.
to the calculation of the GSIB score for EU-based global
Got a lot of positions
systemically
open.
important banks.
And that's doing really well now.
Do you, the Federal Reserve as being a part
Stock
of
split mid-July.
do you believe
I have
right
a $400
now that
call.
this change reflects
Do you want to know the
Federal
strike?
Reserve as an influential
I mean, the
member of
expiration?
Basel Committee? Apparently,
Join the
it looks like
Discord.
this may very
It's
well
in
provide,
there. I'm pretty sure that's a
some
free one
advantages
too.
to
I'm
our
pretty sure that's
European
available to
banks
everyone.
over
You got to be a
US
Discord
based upon
member.
this reassessment of how they view risk within the EU community.
So my understanding of that is that it's really about supervisors being able to use discretion about transactions that go across national lines within the European Union.
Yeah.
It doesn't apply at all here. And ultimately, the capital rules that Europeans apply are decided by Europeans, not by us.
Very good. Thank you, Mr. Chairman.
Thanks, Senator.
Oh, geez, I think I have a Roblox
Warner from
position
Virginia is
too.
recognized. Thank you, Mr. Chairman. And Chairman Powell, it's good to see you again. Thank you for your service to our country. I want to go a couple of different directions. First, and I think some colleagues have already raised this. Well, the truth is, what we're grappling with right now on inflation is clearly a global phenomenon. I think even the Cato Institute.
All right, that's enough of that. It's pretty much like a nothing burger. And, I mean, we've seen, I think, more than we really need to see for that. The big thing here... Oh, my gosh. The big... Well, I don't know if I want that screen. Do it like that. Make me bigger. Pull out the Discord. Okay. That was getting irritating. Just a big nothing burger. They're not really resolving the actual issues that are going on. And it's just getting obnoxious to listen to. Actually, I'm live and sharing my screen. I'm going to stop sharing that in the Discord. I see there's some people in the Discord. What's up, guys? I'm also live on YouTube. What's up? I lost my train of thought. We'll start from the top. Powell is desperately trying to navigate the conversation around the things that he is supposed to be an expert on. And what these senators continue to do over and over and over is to get him to have some sort of political view. Or get him to basically say over and over that he wants to stop inflation. Because that's what they're most worried about, right? They don't actually care about solving a lot of these problems. They care about getting elected again, and getting elected again means virtue signaling that they want to handle the price inflation. And when it comes to the energy prices, they're, of course, doing their best efforts to try and blame that on the Federal Reserve. Keep in mind that the money printing, supply chain issues, if anything, it can be more pointed at them and not at the Federal Reserve. All right. So most of the things the Federal Reserve did was on request of the Congress, and then Congress turns around and then blames them for what they requested to occur. So it's exhausting to watch this occur over and over and over. So I did want to pull up some of that. I just wanted to hear a few remarks to see how the market was going to initially react to that. There could be something that comes up, maybe another Volcker comment. We did see the market pause on some of that price stabilization conversation. because basically that will cause the recession. Bringing stocks down causes people to lose bonuses, causes companies to cut jobs. We're already, bond markets have already priced in treasury bonds have already priced in a recession. So when they say, oh, analysts have now priced in are predicting a recession, it's like, what do you mean predicting? It's already here. And so, it's just stupid to see. We also had more housing data come in this morning that shows that the housing market is definitely regressing and coming back. And that's about it. We're going to have more of that testimony tomorrow. And I, again, might stream some of that in the morning. I don't have the patience to watch the entire thing. Because like I said, this is the same conversations that occur over and over and over. Basically, there'll be nothing new tomorrow, maybe just different people asking questions. I'm a little sad we did miss Elizabeth Warren asking questions because usually her questions are a different level of absurdity, and that can be almost comedic in effect. But we didn't get any of that today. But right now, it looks like the market's melting up in unison. We've been watching the advancers catch up to the decliners since the market opened. After a gap down, came down about a 1% before melting back up. I believe that we're over yesterday's highs. Let me look at that right now. The big thing that my eyes are on is energy stocks. Actually, yeah, we're over yesterday's highs. So I think this rally will continue on the day. Give opportunities for calls. Tesla, big eyes on Tesla and energy though. Tesla's in a really interesting spot. I mentioned it earlier on the live stream. I think Tesla could go to 650 from here if we see another downside move after the day, or it could melt all the way up to 760 to 775 range. Let's say 765 to 775. Past there, we could push to like the 850s if we get a sustained rally. And Tesla doesn't have to move with the market too, so keep that in mind. That was something that we were kind of charting out in the Discord previously with a little help from our friend Joe, the portfolio manager. So that's what I'm looking at right now. Did buy up some XLE and CCJ, UUUUU, and UEC this morning. And that's been playing out well. Yesterday, I unloaded a lot of that biotech, which was nice for that gap down. I have not bought back yet, and I'm probably going to be rebuying those positions in July. I still hold leaps on IBB, and bought those a while ago, though. And let's see, do I hold any large calls? There's no other options in the area. And actually, even with companies like CRISPR not doing so hot today, although coming back some, we're seeing IBB still up almost 2% on the day. So that's cool. UNG's now in the green, so those options are doing well now. And had a great purchase this morning there, from the looks of it. Yeah, beautiful. Beautiful performance on these purchases since the purchase. Very large positions in energy right now for me. Definitely a dominant portion of my portfolio. So, and it's been kind of rough trying to get a good entry in there, but I think today we finally nailed it. Because everything seems to be going smoothly. I actually hold long puts on SPY as well. And I'm letting those kind of melt into this rally. Why? Because the downside moves are so quick. And the macro fundamentals just say meltdown. You know, this market, we said on the Sunday report, if you watched last Sunday, I said bounce likely to come in. We saw the bounce yesterday. At the highs yesterday, I set up some more longer dated puts that were far out the money. And I still feel very comfortable holding those even into this rallying market, just because I feel like when we reach probably like the 380 mark, it'll be a rapid fall down, and I'll just reload those puts on the way back down. So that's my anticipation right now. I don't think there's any reason for me to believe whatsoever that the lows are in on the market. 362 is low, but it's not as low as the 330 to 320 range that we're expecting. And due to the volatility of this environment, I still think that it could get real rough from here. That we just never really saw people actually get like depressed over market prices. Maybe I'm a bit in a bubble because we have an awesome community and this is who I interact with the most in the Discord. So everyone's got a pretty level head, especially with their emotions, especially after we've all been trading together for a while. But really did not see much like full on like, oh, I don't even want to look at my stocks, or people just like straight up leave the Discord. We didn't really see much of that occur lately. So I'm still feeling like more lows on the way. More capitulation could come. But it's been a pretty enjoyable market so far. I'm going to go back to the stream screen because I just realized that I don't even have these stocks up. And so no one's been able to see that in the bottom right corner. Let's do that way. There we go. Yeah. So hit me with some questions if you got them. I'm going to pull this up over here. And I think actually, if I don't see any questions here, we'll call it just for wanted to get some comments on the testimony. Mostly these are nothing burger, but usually if they're going to say something dramatic, they're going to say it right at the open. I don't see any questions on the YouTube, so we're going to call it here. And then for the market close, I will be live streaming on TikTok, and I will catch you all there. Hope you enjoyed this little morning live stream. Hope we're doing well. Make sure to join the Discord. Ask all the questions you want to ask.